Peter Rose, Longwood Currency Trading. I've been thinking over the last several weeks in doing a lot of emails with different folks that are nice enough to take the time to send emails to me and send some questions and stuff. And I try to do the best that I can in working with folks, but it's sort of limited. The biggest thing that causes a trader to fail is simply they don't get out of a bad trade. It's as simple as that. You know, when I work with a student in a consulting thing, I've got time to develop a background of stuff with them. I mean, just doing, you know, there are guys out there that'll do consulting for 100 or 150 bucks an hour or something like that. But it's just spotty. And that's really not teaching anything, because they're simply answering the one specific question. So when I work with somebody, a lot of that discussion, if I don't have a relationship with that person, is to find out, well, where are you at? What are you doing? And it isn't sufficient just to tell everybody carte blanche, well, you don't get out of your losing trades fast enough. That doesn't have any impact. That's as stupid as telling somebody to go on a diet. Diets don't work. You know why they don't work? Because you're doing something that you don't want to do, which is limit the foods that you eat. The only successful way to accomplish what you're trying to accomplish in a diet, which is to lose weight, is simply to eat better foods, more and less on the portions of the foods that aren't so good for you. It's just a simple matter of switching things around. I did that, for example, I don't know, it was 20 years ago or something. I was doing a lot of grilling and eating meats and heavy foods and stuff, and I just flipped that around. I didn't stop eating grilled meats. I just had a very small portion, maybe 4 ounces of it, and the rest would be vegetables sauteed up, or, you know, other good stuff. I mean, I lost, you know, like 14 pounds, something like that. And trading is the same way. When I just get out of a position that's going against me, yeah, I lose. But what I don't lose is $10,000 because the position continued to go on, and I'm going, geez, that's a lot of money to lose. I think I'll stay in because what? Because it'll turn around and come back? Now, in some of the trading that I do, where I am looking at positions that are have tremendous potential to make a movement, and I am confident in my analysis, I have the ability to determine what something should do based on the rules that I developed. It's not rocket science. But you develop that ability to say, well, this is what should happen. It's a probabilistic estimation, right? And we all do that, whether you understand how to do probability analysis, not mathematically, but just how to do it correctly, or whether you, or not, you can still do probabilistic analysis based on your knowledge of trading, right? I mean, that's what trading is all about. And it's people asking me, you know, how do I do a Bollinger Band, or how do I first of all, I don't use Bollinger Bands, so I can't help you on that, but questions like that really don't have anything to do with trading. They have to do with the magic juju secret crap that everybody tells you is going to make you a successful trader. And I just try to keep shying away from responding to those questions, because they're not, the answers aren't helpful. And I get tired of saying, don't do that. Because then I lose subscribers. Well, fucker tells me not to do it. I'm asking him how to fix it. Well, you know, look, Slick, maybe you're doing the wrong thing. And I'm just trying to get you on the right track. Oh, man. I've made this bet with a couple of people, and nobody has really got back to me, maybe because I'm right. Nobody wants to admit they're wrong. But I have said to them, I'll bet you can turn your trading around if all you do is take a short stop and get out. And I think the hesitancy in doing that is because they realize, oh, I'm going to lose a lot. Well, no shit. And the reason you're going to lose a lot is because you don't know how to trade. Why don't you learn how to trade first so that when you do your entry analysis, the entry analysis is valid, instead of just saying, like everybody else out there that's showing you how to trade, well, if this line crosses that line, or the RSI is this, or it's Tuesday, then you go in and take the trade based on things. Instead of knowing how to trade, you're going to abrogate your decision to risk thousands of your dollars on things instead of your knowledge of how to trade. It makes me crazy to hear that. And it's sad, because you could be so successful in trading. Now, my situation in life is different than 99% of the people that I talk with. I mean, I talk with a lot of folks in their 40s and 50s and stuff, but more in the 21 to 34-year-old age group. But there's a diversity of folks that are there. And you're not in the same financial situation that I am. You don't have the same life experience that I do. And so I'm not going to teach you to do what I do, because what I'm doing now, many times, and it's more in the position management phase that differs as to what I would teach somebody new getting into it, is because I don't need to make the money. You do. You need to replace your job income. If you're older, you need to build a solid base of income that you can take into your retirement years, or build up the cash reserves that you have, that you can put in an index fund that'll get you 6%. A couple $100,000 at 6%. That's $12,000 a year. It's $1,000, $1,000 extra a month. Well, average Social Security is like $1,500 a month. So you're doing 3/4 of your Social Security by pulling the money out at 6% from an index fund. Come on, you can't beat that. So the thing you have to bear in mind is that if you're going to ask me for help and advice, I have the broad view of the whole thing. And that's why I ask people that send me emails, how old are you? Where do you live? What's your job? What do you like to do? Before I work with anybody, even communicating through emails and stuff, I send out a questionnaire form, and it's like, 15, 18 questions that have to do with who are you? What are you looking to do? How much money do you think you need to make in order to make the risk of trading worth your while and the time that you're going to spend at it? And it's only in that way, by helping you identify what your needs are, that I'm going to be able to show you how to avoid the biggest mistake that traders make that causes them to fail. And that's by letting a bad position run, by not setting a short stop and getting out. Setting a short stop is you think it's like, oh, I'm the scalper, I don't want to trade 19 times a day. Neither do I. When you're learning to trade, you need to build good habits. And the best habit that you can build is to set that short stop and lose, because that means you were wrong. Well, what were you wrong about? Setting the short stop? See, that's where everybody's wrong. You're not wrong in setting the short stop that's causing you to lose. You don't know how to trade. Why don't you talk to somebody that can teach you how to trade, instead of somebody's going to tell you to look at a fucking Bollinger Band? or to set a 20 or 30 pip stop, and when you run into profit, peel some of the profits off so that it never hurts to ring the cash register and make some money. I mean, all these crazy, stupid stuff that really don't have any basis, not only in theory, but in practical application in the currency market. The biggest mistake that you're going to make in your trading, the biggest mistake that I make in my trading, is I'll let a bad trade run. Now, if you're trading a couple of full lots or 3 or 4 mini lots or something, and you let that bad trade go, let's say you've got 2 full lots, you're working 20 bucks a pip, and you let that guy run 40 pips against you. That's 800 bucks. So how bad is that? Well, it's not very bad. I mean, $800 is a lot of money if all the money you have is to trade the 2 lots. But in the big picture of things, in a yearly income standpoint, that's not a lot of money. You have to put that in perspective over the year and say, if all I did was do that once stupidly, oh, okay, I could work my way out of that. But the problem is that you do it consistently, and those $800 losses mount up until you're $3,200 down, until you're $6,000 down. And now, instead of being able to trade 2 full lots, I mean, margin on a full lot right now in some of the major currency pairs, 6,000 bucks, $7,000. Some of them is 2,000 or 3,000. I always just say, figure it's going to cost you 5,000 bucks for margin on average, and you're pretty safe with that. I use 6,000 just to be safe. That's why I trade $10,000 for a 1 full lot. And if I manage my money correctly by getting out of the bad trades and limit that bad trade for let's say 10 pips, I'm going to lose 100 bucks a lot. That's it. Now, if I do that 2 or 3 times, I'm going to go, phew, man, I'm really off on my timing. What am I going to do? Okay, so I've done that 3 times. I've been stupid 3 times. I get clipped out. So I'm 300 bucks down on a $10,000 account, trading 1 full. But if I let that go 40, 50, 80, 90 pips, which is what happens now, 90 times 20. Now you're at $1,800. You're cooked. I make those mistakes. I still make those mistakes. If I'm making those mistakes, I know you're making them. I can recover because, number one, I've got a lot of money behind me, and I've made a lot of money. Well, not like some guy driving around in a Lambo, but who cares about them? You have to be consistent in the way that you make your money. But every now and then I'll slip off and I'll say, oh, I just know where this price is going to go, and so I'm just going to hang on, and then I'll stage in as it comes back in my favor. Well, that price will get so far away from me you can't afford to stage in on the way down, because you're so far away from your average price that if that thing swings around and continues wrong, in the wrong direction for you, your losses are catastrophic. And that's what's going to happen to you when you start trading a larger account where you have the ability to stage, as opposed to learning how to trade well with the couple of mini lots that you're going to work with, or starting off when you're really getting up into the 5-figure accounts. You're trading 1 full lot or 2 full lots or something like that. You have to have the discipline that gets you out right away. You have to get out. You cannot let it run. You can't say one time, oh, I've constantly got out at 10 pips, but this situation is better, and I'm going to let it have 30 pips to run. I got to give it room to breathe. really. You're going to be staging into that thing in the wrong direction. It's going to come back in your favor. You're going to stage some more, and it's going to go. And that's it. That'll be your account. You know, some of the guys that are serious traders out there that are trying to help you in these videos and stuff will tell you that it only takes one trade to take your account. You can lose your account in one trade if you're really stupid. But trying to combat that from a psychological level is very difficult, right? I mean, if you've been trading and you've been stuck in a situation like that, then you know what I'm talking about. If you haven't traded to the point where you've got clipped a couple of times really badly, you have no clue as to how bad it will get. And you'll get lucky, and a lot of you are not in the United States, you're scattered out all over the world where you're trading at 200 to 1 leverage, and you are going to be, you're just going to be annihilated. Yes, if you take a $5,000 or $6,000 account at 200 to 1 and you get 6 or 7 good hops in a row, you could be up at a 6-figure account. Do the math at 200 to 1. But the fact that you're adding on so many dollars for such a small pip change, you're trading 40 bucks, 40 full lots, $400 a pip on a $10,000 account. At 200 to 1 leverage on a $10,000 account, you can trade about 40 full lots, right? That's $400 a pip. You've got $10,000. If you go 10 pips out, you're 4,000 bucks out, and you're gone. You don't have the margin to get back in unless you're in frickin' Tibet trading where they don't have any margin limits or anything. Listen, let me tell you something. If you're not trading under the guidelines that the United States Commodities and Exchange Commission or Fed or whatever it is that promulgates the rules that we trade under, if you're not trading under those rules, even though you could trade at 200 to 1, you're crazy. Those rules are not meant to kill you. They're meant to protect you against yourself. Look, 90% of the traders fail. And they fail because they don't get out of their bad trades. And they're trading at 200 to 1, and it's catastrophic. The people cry and whine to me about, oh, I'm not going to take any training from you because you're so expensive and you're all that. Yeah, okay, Slick, that's fine. You go ahead and continue to lose your money at 200 to 1, and you will have lost 4 times what you would have to pay somebody to try to teach you the right stuff. And I don't care because I only want to work with a few people a month. I don't have time to drag people across the finish line. I'm not trying to sell training programs. I don't want to train anybody to have to drag them across and convince them that they have to do certain stuff. Look, I taught karate for over 50 years now. You think I'm going to put up with that shit on my deck? Brother, let me tell you, you got to do it the right way, or you're going to get your ass handed to you on the street. So you're going to get your ass handed to you in currency trading. Well, let me help you. Let me help you by telling you, if you don't get out of your trades, bad trades right away, you will never learn how to trade. Every time you get smacked by having that trade go against you and you get popped out, don't blame the short stop. And anybody that tells you that it's because you got too short of a stop is full of shit. They've got the experience. They've got the training that they can probably go out to 20 pips or 30 pips and do all the staging on the inside of that, reverse staging on the inside of that, and then bring their values up. They're also teaching in a non-FIFO accounting rule system where you can manage your trades totally differently than you can if you have a managed governmental regulations and rules to go by. Man, I tell you, what you can do and what you should do are two totally different things. And if you don't understand that, and you're trading at 200 to 1, and you're listening to all this crap that's out there, and you're using Bollinger Bands and all the other shit, and blaming your failure because I'm telling you to set a short stop, you are. Don't send me an email. That's all I got to say, because I'll tell you you're full of shit right there, and you'll you won't subscribe to my channel and or listen to my videos, and you won't get any help, and you lose all your money, and you'll wonder why. It's simple. If you don't listen to any other video that I do or take any advice from me at all, except this one piece of advice, you're going to be okay. Get out of your non-performing trades immediately and see how your P&L changes as a result of that, and then send me the email and say, gee, I think you might have something going on here. How do you get this entry analysis the correct way? How do you bridge the distance between the entry analysis phase of the life cycle of a currency pair into the position management phase? And where does the mid-level position management phase, where do I begin to stage lots? How do I compound? And where do I use my third phase of the life cycle of a currency pair, which is exit methodology? How does that have its confluence with the position management phase? But let me tell you something. You can take all those courses and all the consulting in the world from me, but it all boils down to you got to have a good position that's running in profit in order to make any money. To use the compounding, to use the staging, to be able to carry a negative position in confidence. It has nothing to do with the entry level. I'm talking about the entry level. If you get the entry wrong, you're not going to have a position to manage. God. Set the short stops, get out, and then figure out why you're getting the hit. And it isn't because the stop's too short. It's because you don't know how to trade. You got to learn how to trade. And don't fucking blame me or criticize me for telling you to take short stop. If you take the short stop, you'll figure out how to trade, because you'll figure out what not to do. It may take you a long time. You may lose a lot of money doing it, but you'll figure it out. Or you can take a look at the folks out there that do know what they're doing and take a course or something from somebody. You don't need to do it from me just because I charge a lot of money. That just doesn't make any sense unless you're trying to make job replacement income. I want to teach somebody to make $100,000, $200,000 a year. Okay? I've made over $100,000 this year, so I think I know what I'm talking about. In any event, thank you for walking around in the yard with me on this beautiful October 25th of 2022, and watching the leaves starting to come down, the beauty of the nature around us. My wife and I just got back from taking the bow dog out for a walk at Coleraine Pond, and it was foggy and all that sort of stuff, and it was just a wonderful day. And now I'm going to go in and take a look at my position and see what I ought to do, and if I don't have anything to do, I'll get another cup of coffee. Have a great day, and have a great trading day.